I want to welcome everyone. My name is Tom Samuelson. I am the founder of a company called Magellan Yates. We're a financial communications company. Previous to that, I spent about 17 years on the buy side investing in emerging markets. And before that, worked for a number of investment banks. My guest today, or my partner here, is Jean Vanderwall. Jean has 30 plus years career investing in emerging markets and global investing. A long time, 25 plus years at Alliance Capital, and also ran a large fund for one of the big sovereign funds in the Middle East. Is the founder of Sycamore Capital, his private investment group. And we're going to talk to you about a specific topic that's I think could be very interesting. We've done a number of sort of discussions which we've recorded and sent out, but this is our first time on LinkedIn Live. So let's get right into it. I think what we're first going to talk about here is Latam Tech. And I think Latam Tech is interesting. Both of us think it's very interesting because tech around the world is interesting. It's due to the pandemic, especially. It's gone to the forefront. It's leading the markets to astronomical levels in every index, and especially in emerging markets and specifically in Latin America. It's created, let's just say, created some havoc. So without further ado, we're going to discuss Latam Tech. Hopefully it'll be interesting for you. So I'm going to put up some screens now, and I'm going to hand it off to Jean to begin the discussion. Go ahead, Jean.
All right. Thank you, Tom. Yeah, it's a pleasure to be here. So, yeah, the technology sector is hugely important because, first, it's an enormous force of disruption on the economies in so many sectors. And then it's a huge source of wealth. It's probably it's been the largest source of wealth in China, in the U.S., and all the economies that have big successful tech companies have seen enormous value creation and wealth creation from that. Latin America is quite interesting in that context, and that's what we're going to talk about today. Tom, why don't you go to the first chart? So it's really fascinating what's happened in the in emerging markets and in the change in the indices over the past 10 to 15 years. So since the peak of the super cycle in commodities, which peaks first in 2008 and then rebounds in 2011, 2012. The weight of tech from that time has gone from 26% to 51%. And at the same time, the weight of cyclical commodity sectors and consumer discretionary, emerging markets, energy and materials, so the cyclical sectors, has gone down from 37% to 12%. So this is an enormous change in the nature of emerging markets. We've seen in recent years, tech has been driving the markets, and in particular, tech in China. And China has an enormous tech market. It's a great source of value creation in the Chinese equity market, and that's what has been driving up the indices. Tom, would you go to the next chart? So in that context, it's not surprising to see how the weights in the different regions have really changed over the past 10 years. So if you look in 2010, which is sort of the peak of the commodity bubble, Asia represented 60% of the market, and then the rest of the world, Latin America with 23%, and EMEA with 17%. Now, the characteristics of both Latin America and EMEA is that they're very typical, old style emerging markets, very very dominated by commodities and cyclical industries. Now, go forward 10 years to the right side of the chart, and you see that the weight of Latin America and EMEA together has fallen by half, and all of that has gone to Asia.
Jean, this is a result. The majority of this of the last, I guess, 3 is a result of the inclusion of China. China in the MSCI is now, I think, at 42%. And I guess it gone from a very small exposure, almost zero, right, to a number of years ago to now sort of dominating. Is that the big cap?
Yeah, so China starts appearing in the indices in the early 2000s, and then by 2010, it's a significant market. And then really right after that, in 2011, 2012, 2013, you get the launch of the big tech companies, the Tencent and Alibaba and so forth. And then China becomes more and more important. And then in recent years, the big indices, the MSCI, the FTSE, S&P, and so forth, starting including more and more segments of the Chinese market, the locally traded A shares into the market, and that's been a big trend in over the past couple of years, and that's led to a huge inflow of fresh foreign capital into the Chinese market. So it is part of the explanation. So that plus the rise of the tech sector really explained this big shift, and of course in Latin America, dominated as it is by commodity and cyclical sectors. And those sectors have tremendously underperformed. So that also contributes a lot to the declining weight of Latin America in the indices. Okay. So you can see on the next chart, if you go to the following chart, you can see this one over here. You can see the current breakdowns. So this is the MSCI emerging market. You see the breakdowns by sectors for the different markets. So the international market, the U.S. market, the Chinese market, EM and Latin America. Let's focus on the U.S. first. The U.S. has a very large consumer discretionary sector, which is essentially it's driven by Amazon. It's very e-commerce driven, and then a large healthcare sector and a large IT sector. These are the 3 sectors that are really driving growth and innovation in the economy, and we can consider them sort of the frontier markets and the tech markets. And then you look at Latin America and you see that consumer discretionary is 9%, but that's not e-commerce. Unlike in the U.S., those are not e-commerce stocks. Those are more like traditional consumer discretionary stocks. And then healthcare is almost non-existent, and IT is also almost non-existent. And then you look at China. Consumer discretionary is 32%. It's a huge segment of the Chinese market, and this is almost exclusively e-commerce stocks. So the traditional consumer discretionary stocks are not big in China. And healthcare is small, but really, it's a sector of the Chinese economy that's growing a lot. And there's huge amounts of investment in that segment. So it's actually creating a lot of sort of value added in the stock markets in China. And then IT is relatively small in the Chinese market, and of course, as we know, it is a key area of focus of investment in the Chinese market. IT is probably at the core of the China 2025 investment planning horizon. So China is determined to become increasingly competitive in the advanced information technology hardware sectors like chips and different things. Okay.
Yeah, I mean,
so you see, in the context of this, Latin America is very, very underrepresented in all the key areas of tech. Okay, let's go to the next chart, Tom. Let's look first at the emerging market, at the IT sector in terms of emerging markets. So Latin America is basically non-existent. There's I mean, and the definition is pretty wide here. So the definition in the MSCI IT in Latin America includes Cielo and Globant. Cielo is more of a payments company, and then Globant is a cloud sort of computing industry. So these are not the traditional EMIT sectors. All right, next chart. And then in emerging markets, internet and e-commerce, this sector is practically completely dominated by China and the rest of Asia. So you look at Latin America, it's 10%, EMEA is 4%, and then the rest is 3%. So we're having a situation where 83% of this segment, which is the fastest growing segment in emerging markets, is in Asia. Okay. And in Latin America, if you go to the next chart, Tom, in Latin America, what there is of the internet and e-commerce segment is extremely concentrated. Basically, Mercado Libre, which is the big e-commerce early mover marketplace winner in Latin America, represents 70% of this segment. And then the remainder of that is mainly made up of two payments companies. So we have StoneCo and we have PagSeguro. And then 5% with another small marketplace company in Brazil called B2W. And then the rest is really insignificant. So not only is the segment extremely small in terms of emerging markets, it's completely dominated by very, very few companies.
Let me make a comment here, because certainly the realities are stark, because Latin America has fallen behind. But the interesting part, and I mean, talking about some silver lining, I remember going to Brazil, and one of the reasons is I think Latin America is just starting to play catch up. So going to Brazil in 2015, 16. And starting to talk to people and looking at the fintech sector, right, which is a lot of this is categorized as fintech. Fintech sector was almost non-existent. I think by the end of 2016, there were only 5 fintech companies that were in Brazil. Only 5 private companies in fintech. Everyone was concentrated. Most people were focused on, impeaching the president. But you flash forward a few years. I think today Brazil has one of the fastest growing fintech sectors in the world in terms of growth. Not as big, obviously, as China and the US. So you can make a case that Latin America is playing catch up here, and that a lot of this explosion in Asia was set up during the early 2000s, or let's say 2010, 11, 12, when a lot of venture capital money piled into China and places to support this sector, both internal money and external money. And you're just now seeing that in Latin America only over the last 18 months to 2 years. So there is a silver lining that this may change over time, but right now it's pretty dramatic what's happening in terms of the concentration.
Yeah, well, that's exactly right, and so fintech is an interesting sector because it's a sector. If you look internationally, it's a sector that actually has a lot of local characteristics, and it does not necessarily go to the big, global Silicon Valley players. There's more potential for local expertise, and also tying it to local dominant players. So it's a segment that's in many markets is tied to the marketplace phenomenon. So you have in China, Alibaba is the dominant marketplace company and also has a dominant a fintech company, and you see that that's the case of Mercado Libre. So Mercado Libre combines two of the most value creation sectors of tech. Marketplace is the dominant value creation area of e-commerce. It has a dominant marketplace in Latin America, and then it has its own payment platform, which is something that you see, in a lot of these companies, and it's successfully become, one of the dominant, if not the dominant player in payments in the Latin American market. So that's the story of Mercado Libre, and it's a very, very attractive story, and that's why it trades at an enormous valuation and it dominates the segment in Latin America. In addition to that, you have the venture capital money, which has entered into Brazil, and it's significant amounts. You've had big guys like SoftBank throwing a lot of money at Latin America, and in particular at the fintech market. That's practically where all the VC capital has gone.
Correct.
Has been fintechs. So as you say, Tom, there's been over the past 3-4 years a lot of new companies in fintech, including StoneCo and PagSeguro, and these companies have attracted a lot of capital. They have high valuations, and they seem to be doing quite well. And the reason why all this money is going to this is that the investors have identified the financial sector in Latin America and in Brazil in particular as a sector that has a very high profitability and very high margins, and is vulnerable to disruption. And we've seen that already over the past 5 years with the impact on Cielo. Cielo had been the top payments company in Brazil. It had enormous margins, huge profitability, and over the past 5 years, it's been in a pretty severe process of decline because of all this new competition from fintech, and also because of regulatory reasons.
Yeah, I mean, another another big reason why Brazil and Latin America in general is prime territory fintech is the concentration, right? So, as we know, years ago there was basically 4 or 5 banks in Brazil which controlled 80% of the financial sector. Incredibly concentrated. They were bloated, too many branches, and obviously that's all getting now disrupted, and money's just piling in. Again, hopefully, obviously the words hopefully, as these companies mature, not mature, but let's say accelerate growth and start to go public, this chart will disperse a little bit, right? As opposed to being just basically 70% Mercado Libre. But
it's the area of focus, and that's where the investors are betting, and there's a significant amount of money, and it seems to be moving in the right direction there. So companies like Stone have actually, they were IPO'd at high valuations. The stock has done well, and they're increasingly important.
Yeah, I mean, I think after, we have now in the short term, the IPO of Ant Financial, and out of Asia, and that's of China, obviously, and that's going to give a boost to companies, potentially companies like Nubank and some of these other unicorns that haven't come public, that may actually come on the market now because of the potential success of an Ant Financial coming out of spun out of Alibaba, but that remains to be seen.
Ant Financial, so Alibaba's payment fintech business, exactly. They're now expected to IPO over the next 2 weeks. Initial market cap valuation of $330 to $340 billion. And the IPO is expected to be above $35 billion. So it'll be the largest IPO ever. And this business was started from scratch, I think in 2012 or so. So yeah, it's huge creation of value. So what we've seen over the past several years is all the markets, no matter where you look, have been dominated by tech. So if you want to look in the US, NASDAQ tech stocks have entirely dominated the market. If you want to look in China, it's the same thing. In Europe, it's the same thing. Uh, Really, the only thing that's done well in Europe over the past 5 years has been tech. And so this chart shows you, clearly this happening over the past 5 years. And of course, Latin America doesn't have tech, so it really hasn't been impacted by this. I've sort of created my own Latin American tech index. And Tom, if you want to show the next chart, you can see exactly that the same thing is happening in Latin America. So basically, if we look over the past, so this is over the past 4 years, and this is an equally weighted index of Latin American tech stocks, and you see the same thing that's happened everywhere in the world, where huge outperformance is taking place. And unfortunately, this would have a big impact on the indexes, except that tech is so small in Latin America that it doesn't have any impact. Really has a very minor impact. And then, so if you go to the next chart, Tom, basically Latin America, because of such a small tech segment, it behaves much more like a traditional emerging market kind of investment. Very, very cyclical, very dependent on commodities and so forth. And to show that, what I'm showing in this chart here is the MSCI Latin America and the price of copper, basically. And you see that the correlation it has been very high. And in fact, what's going on right now is, in fact, copper has been relatively strong, and Latin America has not kept up completely. But
that's to, I think, the China's reemergence from the pandemic early, and has driven a lot of these commodities in the short term have really spiked, because again, China's priming the pump, and they've emerged months before everyone else, and this is what's driving some of these commodities for sure.
Yeah, I actually just realized, Tom, the chart is mislabeled. The black line is copper.
Okay.
So what's interesting is that recently the copper price has gone to copper prices have been very strong in recent months, and Latin America has not kept up. So this is sort of, though these copper in Latin America are very tied, what you're getting recently is the price of copper is going up, and Latin America is not following, which is strange, right? Because you would expect Latin America to do much better with rising commodity prices, copper in particular. And I think that's explained essentially by the impact of COVID. Latin America is getting hit so hard by COVID, and it's impacting the finances of many countries, so hard, like the increase in the debt levels in Brazil and so forth, that strangely Latin America is not keeping up with the copper price. So, I think you could see this as positive, as eventually when the COVID issues are resolved, and if commodity prices keep on going up, then Latin America should catch up with the copper price.
Yeah, for sure. I think also that you in the very short term, obviously, we've seen a lot of social issues, rioting in Chile, in Colombia, and Argentina, and there's obviously with the problems with Bolsonaro and the opposition have really, and again, versus what's happening in China, where it's relatively calm and they're starting to grow. And as you said, this is a COVID issue of this break in terms of the correlation. But I think you're right that it will revert back to the mean.
Yeah, and finally, just to conclude, let's go to the next chart, Tom. So what's the issue in Latin America? So to understand that, let's look at what creates value in tech. And there are several areas so I list them here. So semiconductors and IT hardware, is super important creating value. So TSMC, which is the Taiwanese chip company, is the third or fourth most valuable company in emerging markets. So if you can get a dominant position in chips like Taiwan has, or like Korea has with Samsung, that's enormous creation of value. Latin America has lost that boat. There were some attempts in in the 90s, and Brazil had some inclination towards moving into semiconductors, but those have all been completely abandoned, and there's no more potential for participating in that area. Okay, the second area is search engines. So this is another area where Latin America has lost the boat. So the U.S. is, and most of the world is dominated by Google, but some countries really from the beginning have managed to build positions in this. So Korea and Japan and Russia and China, and being successful in this area required in the past to have very strong regulatory intervention. So these companies that have been successful competing with Alphabet, to a large degree, is because their markets are protected by regulation. So that was not done in Latin America. So Latin America, in essence, is completely part of the Alphabet colony in terms of search engines. And in social networks, at one point there was some effort in Latin America, but those have all been completely dominated by the American networks as well by now. And that's not really, it's not true in some other markets. And some markets like Korea have a huge amount of innovation, and they've remained competitive. And then Russia and China, once again, have strong regulatory barriers that have kept the market for themselves. So that's another area that Latin America really also has lost the boat, and can really not recover its the distance. The e-commerce platforms is something where I think, fortunately, because of the early participation of Mercado Libre, two graduates out of Stanford, I think they founded the company in 1998 or something, a long time ago. So these were early movers, and they got the advantage of early movement. And Mercado Libre is the one exception here, where a company in Latin America has been able to develop a very strong position in e-commerce in a marketplace company. And you see this is actually one business that actually local expertise and early mover advantage actually creates possible winners. We've seen that in Europe. We've seen it in the African market, and Singapore in particular, with the SCA platform, which has become hugely successful also all through Southeast Asia. And then the other area is payments. And here, I think it's an area where Latin America has more potential, as we mentioned. And so far, Mercado Libre and the companies that we mentioned are having success. And then the final region is cloud, and that's another area where I think, once again, you need a lot of capital, and you need you need a favorable regulatory environment. And not much has happened in Latin America, and I think once again the big U.S. players are dominating in this, with the exception of perhaps Globant in Argentina, which has built a good business in cloud computing. So I put Argentina there. So the conclusions from this, the lessons is really in tech. Latin America has been largely colonized by Silicon Valley. It's the same as Europe. Europe is also a region that's highly dominated by Silicon Valley. Some countries like India, it's an open question, because I think the Indian regulators are very conscious of what China has done and the market value created in the Chinese market. So I think India is moving towards more regulation and more protection of this market. But the rest of the world, in essence, is I think the game is largely up in most segments. So and then the final point is to be really a big winner in this segment, you have to control multiple pillars. So if you look at Amazon, Amazon, they started as a marketplace, and their cloud business is now worth as much as their marketplace. Alphabet is involved in the social networking as well as search. Alibaba's involved in everything. They're absolutely in every segment. Tencent is also almost involved in everything. Payments is a huge part of the Tencent platform as well. And then Mercado Libre in Latin America is the big hope for really a market-leading, very successful company in the Latin American region.
I want to just point in that one of the key things for, I guess, from a standpoint of just the future of e-commerce is logistics, right? And we know that Latin America is always a difficult place from a logistics standpoint. And what this pandemic has done, there are a number of companies that have sprung out, or let's say were established and now have exploded in growth regionally, that are focused on logistics and delivering, whether it's delivering food, delivering goods. Even Amazon has outsourced their logistics in Latin America to other companies because they know how difficult it is, as they've done in other places. But that's certainly, I think, e-commerce, when we come out of this, that's one area, again, looking at the positive, that there could be some great growth because, as you mentioned, payments, because of the banking systems, the inherent banking systems have become, Latin America, Brazil, I think Mexico now is a bunch of payment companies. I think these are the areas, e-commerce and payments, where you're going to see regionally Latin America start to pick up some, because they're, as we said, one of the big points, they're just way behind.
Yeah, so Mercado Libre, which is the big elephant in the sector, is actually investing a lot in logistics. So they're very clever, they're very capitalized. They're into payments, they're moving aggressively into logistics. I think there's space for other people, but I think people like Mercado Libre, they follow Amazon very carefully, and they do everything Amazon does. And if you look at Amazon in the U.S. market, it has moved so aggressively into logistics, which is making the barriers to entry, almost impossible in the U.S. market for anybody. So the other model is the Shopify model, which I think could work in Brazil, and there are some companies that are exploring that. And then the remaining areas, things like warehouses, which are a relatively important segment in Brazil. A lot of the warehouse real estate is actually controlled by multinationals. So, but there's some opportunities also in other companies participating in that area in some of the Latin American markets. So the other charts, we could skip those. They're basically showing how tech has outperformed in all the key markets.
Yeah. So just let's sort of wrap it up. And I mean, I think one of the stark conclusions that you're basically saying is that Latin America is just way behind. The problem for portfolio investors, and hopefully we have some people involved in portfolio investment, is the indexes themselves have made Latin America kind of becoming more and more irrelevant because of the inclusion of the Chinese A shares. So moving forward, we've talked about this, but there is a lot of talk about the EM index as a whole being sort of not as efficient, let's use a kind word, and that mandates may come out where this, okay, if I want to invest in emerging markets, and if you're going to put 42% of money in China, is it really going to represent emerging markets? And now we're seeing the beginnings of emerging markets ex-China. So what are your views on that, and how that will affect potentially investment in this sector going forward?
my view is that China will continue increasing as increasing its weight in the MSCI indexes, and that the talk about creating China as a separate asset class will increase a lot. And my expectation is that within several years, maybe 3 or 4 years, who knows, that China will become its own asset class. For my own personal investments, I already treat China as a separate asset class. It just confuses the matter to keep it within emerging markets, and particularly because emerging markets is so much of a reflation cyclical trade, and China is not. So you're just confusing things by keeping them together.
Agree.
So I'd much rather keep them separate.
All right. Well, again, I want to thank everyone. Hopefully, there are people watching. We have no idea, actually. But if when we go back and look at the sissy, there are people watching. Maybe we'll do this again. Who knows? But again, thanks very much. It was I learned a lot, and hopefully others have learned a lot. But I thought it was very good, and thanks again for everything.
All right, thank you.
All right, we're no longer live, but I just have to hold on 1 second. I gotta.
Is it available?
I have no fuck, dude. I have no fuck. I mean, I know we were live.
I hope you're not online anymore. You're cursing like this.
Yeah, I know. I know we were live. Hold on 1 second. Let's see.
Maybe it was.